Is the stock market bubble finally starting to burst, as the last time the Treasury made this move was right before the 2000 stock market crash? Now, before we come over and talk about what happened on March 10th, year 2000, right before the dot-com bubble burst, and let me just refresh your mind real quick. When that dot-com bubble burst out here for the NASDAQ, I got to scroll this chart out a bit. Notice if we measure from the high all the way down to the low, the NASDAQ dropped roughly 83%. Well, if we look at where we are currently in the market, notice what we had on Friday. We closed with a doji candle. We have a 9-count indicator as well. The Tom DeMark 9-count sequence also finalized out here on Friday and with a doji candle. So are we going to finally start to see a pullback? Notice we have several gaps just on this last leg up that still have not come back and been filled. If we go ahead and we look from all-time highs all the way down towards the high price on Thursday, we were only roughly 1.5% away from making another new all-time high. Then if we look at that candle back on March 10th, the year 2000, we also had a doji candle. We measure from the high of that candle down to the low, we can see we had a retracement of roughly 13% from the high all the way down towards the low before the NASDAQ came up, made a new all-time high, and then had that massive drop on the way down. We come back over to the current market conditions and we measure down 13% from the current area. That would bring us all the way down to a price point of about 461.89. That would be a good help in terms of filling a lot of these gaps that we had left behind. Now, if we were to pull a Fibonacci retracement from this last leg up all the way up to the recent high, notice right around that area would be just below the 61.8 fib level, kind of in between the 61 and 78.6 fib levels. That would be a logical place for the market to retrace. However, are we going to be able to get down there? So let's talk about what just happened. The U.S. Treasury abruptly buys $10 billion of its own debt in a massive historic Treasury buyback. Now, the last time that the Treasury has done something to this magnitude was March 10th, 2000. However, back then it was only $3 billion, not the $10 billion this time around. And on Friday, we got the jobs number coming out, and Trump presses Fed Chief Powell to cut interest rates by a full point despite strong jobs report. And if we come over and look at the Fed Watch tool, as they say, they see that the earliest we're going to get a rate cut is 51.8%, and that would come in September. We are only roughly, at the time of recording this video, 10 days away from the next FOMC meeting. Then we couple that with the fact that consumer debt is surging in April as student debt soars. Now, this is going to be a problem, right? When consumers have less disposable income, what do you think that means? They're going to be buying less. What is that in turn going to do? That's going to end up lowering earnings of these companies out here, and it's only a matter of time before it all falls apart. Now, we see this article right here. Don't buy Tesla stock as Trump and Musk feud yet. Now, if we come over and look at a chart of Tesla on Thursday when Trump and Musk was having that big old spat, notice Tesla stock absolutely got decimated. If you look from the closing price of the prior day all the way down to the low, Tesla dropped from the close of the prior day to the low 17.5%. Then on Friday, we did get a rebound where Tesla was up 10%, but notice that was nothing more than a massive inside candle. Now, we do have a lot of news out this week that could actually move the markets in a big way. For instance, if we come over and we look over here on Wednesday, we get the CPI data coming out. Is it going to show that inflation is once again on the rise? Let me know your thoughts in the comment section down below. We also are going to get the 10-year bond auction on Wednesday as well. And then on Thursday, we get the PPI data. And let's not forget, do not sleep on this data. At 10 a.m. on Friday, we get the preliminary consumer sentiment, followed by preliminary inflation expectations. Quite often on that day, we end up getting a massive trend day on a Friday. And we're going to see, will it be a massive trend up, or is it going to be a massive trend on the way down? If we come over real quick and we look, America's debt is at a breaking point. Trump's tax bill might just push us over the edge. And again, that's kind of the spat between Trump and Musk. Musk is like, why do we got to spend all this money? Trump's like, hey, big, beautiful bill, let's go. And then you couple that with the fact that the government just bought back all of that debt. Why? To save on some interest payments. We already know that interest payments are absolutely getting out of control. And if Jay Powell is unwilling to cut interest rates, it's only a matter of time before we're going to run out of money. Now, if we look at last week's performance, technology and communication services were the two big leaders out there, and the three laggards out there: consumer cyclicals, utilities, and consumer defensive. All in all, it was a pretty bullish week out here for stocks. But is the tide about to change? If we come over and look at the fear and greed index, right now we can see we're sitting at 63. We are almost dead smack in the middle of greed. Then we come over and look at the most recent investor sentiment survey. This past week, we came in at 32.7, a smidge lower from the prior week. We can see the undecided or the neutral category rose a little bit to 25.9 from 25.2. Then we look at the bearish reading, it dropped from 41.9 to 41.4. So again, this is kind of in line with what we'd expect. Nothing out of the ordinary on that. I do want to remind you guys, Take Profit Trader still have their amazing sale. 30% off all their valuation accounts. Best yet, no activation fee. To take advantage of this offer, make sure to use the links in the description box down below. Use code epitome at checkout. Now, if we go over and look at the yield curve real quick, we compare 10-year versus the 2-year. We can see that's actually starting to come back down. That actually is a positive sign for stocks. When that yield curve starts to steepening, that's when we see stocks getting into trouble. But wait, we're starting to see some divergences out here in the market. For instance, if we look at the Dow Jones, which is the upper chart, versus the transportation index, notice what we had right up here at the highs. The Dow Jones made a double top. Then we saw the transportation index forming a divergence. Boom, we fall off a cliff. Now, what do we have going on? Well, we see the Dow this week making a new high. However, the transportation index on the bottom simply is not making a new high at this point in time. Then as we come over and we look at the HYG versus the SPY on the top, HYG on the bottom. Now, what do we have right over here? Well, SPY this week coming up, making a new high. However, HYG simply is not. We have a high, we have a lower high, and we have an even lower high at this point at a week where we saw the SPY making a new all-time high. Now, when we come over and look at the dollar index real quick, notice the dollar index trying to bounce out of that weekly zone. If we come over and we put this on a weekly chart, we can see basically the zone was drawn from candle wick right up here to the candle body. You can see this week we also produced another hammer candle. So are we going to see the dollar starting to gain a little bit of strength? If we do, we need to keep our eye on gold. We come over and we look at gold this past week. We see gold not only break above this upper trend line, but now gold is threatening coming all the way back into it. Now, are we going to see gold make its way all the way down towards that lower trend line? That's most certainly something we will want to pay attention to. However, if we simply bounce off this trend line again, then I would want to look for gold to make another new all-time high. With gold coming down, that is showing us that uncertainty in the market is starting to subside. Then if we come over and look at the volatility index, the VIX on Friday was down 9.15%. Not quite that 10%, which would indicate Monday or Tuesday likely to be an up day in the market. If we put this on the 5-minute chart, we can see at the low point, the VIX was actually a little bit lower, somewhere in the ballpark of 16.64. And again, the lower the VIX goes, the more likely the ranges are going to continue to contract. Now, if we come over and look at the QQQs over here on the weekly chart, notice we are not that far away from all-time highs. Is this going to be a triple top, or are we simply going to blow right through it? On the weekly chart, you can see it's just been a march on the way up. Last time that we had a candle break the prior week's low was going all the way back to the week of April 21st. Now you can see that large gaping gap we have right up here. Also, there's two different areas where we can draw these Fibonacci retracement levels from. We can take this candle right here, pull it up towards the high. Notice that 38% retracement is just above that gap being filled. Then if we pull it all the way down from the absolute low, that 38% retracement, which would be a minor retracement and what could be a massive move up, would be enough to come over here and fill the gap. If we look at the candle structure on Friday, we closed in the upper third of the range. We got to give one out there for the bulls on that. We look at this triangle that we've had formed. On Thursday, we broke out above it. We closed back down towards it. And then on Friday, we gapped up with that doji looking candle. We look down here at the MACD indicator, basically flatlined around this area. And again, it's hard for me not to pay attention to these gaps. I know the market wants to make a new all-time high. The question though, are we going to get that pullback? Will the CPI data or the PPI data this week produce a negative reaction where we actually get that pullback to start to take place? On the 4-hour chart, you can see the MACD indicator has huge divergence. We came up here, made a new high. Look at where the MACD indicator was. Compare that where the MACD indicator was during this consolidation up here. And look, it is drastically lower now than where it was then. That is another divergence that we have playing out in this market. Then as we come over and look at the volume profile levels, notice that large gaping gap that we have from Friday. Then we have, I'm going to classify this as a P as in Paul. You might say, Mike, why a P? This is a D as in dog. I know, but if you include the gap, which the futures markets will show, which I'll show you guys in a few moments, I'm going to classify this as a P as in Paul. So if we break value area low, highly probable we come down to the lower third of the range. And I'm going to use the candle wick out here from Thursday as that lower third of the range at about 526.82. If we break above value area high, expect a retest from Thursday's high. Now, as we come over and look at the futures markets real quick, for the NASDAQ, before we go over the volume profile levels, I want to remind you guys, I stream live Monday through Friday. Every day the market is open. This week, we're not only going to be giving away Take Profit Trader accounts, we also have some My Funded Futures accounts to give away as well. Now, there's two ways you can win those giveaways. One, you can sign up to the email list down below. I'm going to pick at least one random winner out of that email list, and a majority of the accounts will be given away live on stream. So that's another reason you want to make sure you join our live stream. Now, if we look at the volume profile levels real quick on the 4-hour chart, notice value area high is going to be all the way up here at 21,868.5. The point of control will be 21,775 with value area low being 21,606. Now, notice this week we were able to take out the high from the prior week, but we had some wicks up in this area. So we know at least to some degree there were sellers present. Now, are there sellers still going to be present if we come up there once again this week? Now, notice if we do get above value area high, we start coming down, we want to target that point of control. I want to target value area low, and we can even front run that value area low by using this minus development area within the profile at about 21,635. If we break that value area low, then we can target this next high volume node on the profile at about 21,528. Anything below that, I want to turn my attention back towards this high volume node at about 21,431. Now, as we come over and look at the daily profiles on the 30-minute chart, notice what we have, right? I want you guys to pay very close attention. On Friday, we have this huge minus development area. On Friday, what do? We came right to it. Boom, we rejected right back out. Now, the first time we come into a minus development area, we talk about this all the time on stream. We expect the market to either bounce out or consolidate around that area. Now, does it from time to time slice right through it? Absolutely. Nothing is 100% in the market. Now, we can also make the case that we have a double top. Top number one, top number two. You can see the wicks on these candles. Is this a sign that sellers are present at this area? If so, are we about to go lower? Well, we want to pay close attention to that swing low. If these highs hold and we come down and we break that swing low at a price point of 21,720 and a quarter, then we can go ahead and map out where that double top target would come into play. And that would be somewhere in the ballpark of about 21,571.32. That would put us in the lower third of the range out here from Friday. And notice we had that P as in Paul shaped profile. So below value area low, we're expecting the lower third of the range. And that also would correlate where that double top pattern would also complete at. Now, as we come over, look at the SPY real quick, you can see last week we closed in the upper third of the range, check mark for the bulls. Something that's not giving the bulls a check mark, however, would be, look at the MACD indicator. If I just simply draw a line across the peak one, peak two, and now where we're currently at, notice the MACD indicator, the peaks are sloping to the downside. Now, we have not come all the way up towards these highs, but if we do push up there this week, then it looks like we're probably gonna have some MACD divergence, aka momentum is starting to weaken up at this area. If we measure from all-time highs to the high this week, we can see we were roughly 2% away from all-time highs. That's only one good day away from making another new all-time high. Now, does the market get a little bit shy up in this area and then start to come back down, maybe even trying to fill some of those gaps? On the daily chart, you can see we kind of closed with that doji candle. We broke out of this triangle. Now the question is, can we hold above it, or do we start to fail and come back down? Notice the MACD indicator on the daily chart. As we've made a new recent high, the MACD indicator simply has not confirmed those new highs. Now we can grab our Fibonacci retracement tool, measure from this swing low right over here up towards the high, and notice that 38% retracement will come in just right around that gap being filled at about 564.50. However, we need to see the turn start to take place. We have no signs of it yet. Yes, we have a doji candle. Yes, we had the Treasury buy back all those bonds. Then we come over, look at the 4-hour chart. You can see kind of a doji candle. Then we get a little bit of a shooting star type of candle on Friday. And on the 30-minute chart, we had that large gaping gap, gapping above the multi-day highs. Now the question is, top number one, top number two, do we start to come right back down? Now, what's interesting about this with the SPY, if we measure that double top pattern completion, notice that would bring us very close, almost dead smack on filling the gap that we left behind from Friday. Then as we jump over and look at the futures markets real quick, and we look at the ES out here on the 4-hour chart with the weekly profiles, notice we close in the upper portion of the range. However, value area high will be 6,019.25. The point of control will be 59.82 and a quarter, with value area low being 59.57.75. Now, if we can break above value area high this week and we start coming down, I then want to target that point of control. I then want to target value area low. I then kind of want to target this minus development area right over here in the profile, somewhere in the ballpark of 59.27 and a quarter. Then I want to target this high volume area right over here in the profile. If we can start to get through the other side of that, then we can talk about coming back, challenging these wicks, and then maybe going lower. We can see that there were sellers presence. The markets came back down, but then we were able to get above it, and we're still right around those wicks. So it's going to be interesting to see how this plays out this week. Now, as we come over and look at the daily profiles on the 30-minute chart, notice value area high is going to be 6,018. Point of control will be 6,013 and a half, with value area low being 59.99.00. Now I'm going to classify this volume profile shape as a P as in Paul. And again, similar to what we talked about with the NASDAQ, we have a minus development area. Now on Friday, we didn't quite make it there. We almost made it there. Boom, rejected out. Now you can also see a potential double top pattern starting to form. So if this high holds on Sunday night and we come down and we start challenging that low and we can break below it, then we can go ahead and map out where that double top pattern would play out. That would give us a price completion at about 59.44. And again, that would be near the lower third of the range with a P-shaped profile. If we're trading below value area low, we expect the market to come back to the lower third of the range. However, I want to caution you guys, if we break this swing point, do we come in towards the minus development area, bounce out again, set up a lower high, and then ultimately work our way back down? Maybe we'll form a little ABC pattern within an ABC pattern. Now, Friday night, we learned of a major prop firm being hacked. If you want to see how to protect yourself from this, make sure to watch this next video right here.